Yo, what's up, guys? Long time no see. The title's right. I could have made $2,600 today, but I did not take the trade. I'll explain to you why I couldn't take the trade, and I'll explain to you why I'm happy that I didn't even take it. It sounds weird, but if you watch the entire video, I'll explain everything from why I noticed this trade and why I didn't take it and why I'm happy. Last time I took a trade was on September 13th. It's the last video uploaded on my channel. So it has been 28 days since I took a trade. Yes, that's right. Every single trade I take, I document it on YouTube. And my account balance is sitting at the exact same place as it did 28 days ago, almost a month ago. This is a very big psychological or a strategic shift in my trading because I used to basically take a trade almost every day. And then for the past month, I didn't take a single trade. So I want to go over why that is and what kind of changes happened because of that, and what I've been learning about being patient and keeping things simple. Don't overcomplicate the charts. Keep it simple. Like if you don't see an A+ model, do not trade. If you see an A+ model, go full size, take advantage of that. That's basically how I've been handling my trading this past month. So let's first go over this trade. This trade happened today from New York 9:30 market open until about 9:48. So this was supposed to be an 18-minute trade. And let me go over the high time frame analysis first. So by the time I came to the charts, the candle was over here. All right, it was somewhere over here. Forget about this big candle right there. So it was around over here. And if you draw an equilibrium from this point to this point, we had bounced from the equilibrium with an S&T. And there's also this 4-hour fair value gap, which is lining up perfectly, right? So now immediately I think, okay, this is the day I might take a trade. So I jump in on the lower time frame. What do you see? Confirmed break of structure. We close above, we displace above this series of down close candles, which means if we displace above this, the next target is here, okay? So immediately I have a set target that I will be targeting at 9:30. All right, so as the candlesticks print, we are approaching 9:30. 9:30 candle is over here, okay? This is the 9:30 candle. So before market opens, I noticed that we hit the equilibrium of a smaller range over here, okay? From this range to over here, we had a displacement down and this hit the equilibrium 50% line over there. Okay, so now we have two equilibriums that are working in our favor towards the upside. So market opens over here. This target is easy. It's an internal equilibrium target, which means if we are able to get a trade over here, if we enter long here, and then we target the same highs, the 4-hour equilibrium, that means we could put our stop loss to break even as soon as price takes this. And I want you to realize how important that 15-minute equilibrium is. Now we have not only hit the 4-hour big equilibrium over here, okay, this is the bigger range equilibrium hit over here. Now we also have an internal equilibrium over here. Boom. And this is all right before market open. This is all right before 9:30. What that means is that not only am I gonna target this 4-hour equilibrium, if this 15-minute equilibrium is also activated, I could also target this. And guess what? This is a smaller target. This 15-minute equilibrium is a smaller target, right? Which means it has more chance of being hit. So it's logical to take all your profits or some profits over here because this equilibrium is so close and such a high probability target. But what I like to do is, as soon as price hits this equilibrium, I put my stop loss to break even. I eliminate my risk because as soon as this is taken, there's a chance of price going back down because this equilibrium no longer is working, right? There's only this big time frame equilibrium left that's gonna do the job. So I always eliminate risk after the internal equilibrium has been reached. I either take some profits or I just put my stop loss to break even so that I'm no longer exposed to any risk. But still, you need to remember that the 4-hour equilibrium still can work because we have displayed so far up since we hit the equilibrium on the 4-hour, right? So it's only common sense that when market opens right here and we already bounced this much from the equilibrium and there's only this small amount of move left, it's like 80% of the move is done. So obviously the market is hunting this liquidity. With that logic, I keep my position open for the 4-hour target. That's why today's high time frame setup was so good, because we had two equilibriums that was working towards the same direction. We had this big equilibrium pointing towards the upside. We had this small equilibrium also pointing towards the upside, but smaller. But it doesn't matter that it's small, because as soon as this is taken, we no longer risk any money. That means we could, when the worst case scenario, price comes back down, I either make no money, lose no money as well, $0, or I have that potential chance that this 4-hour equilibrium takes us all the way up to this high, which would end up making, in my case, like $3,500 or something, because my risk would be $750. That's my max risk. So if price comes back down here, I get stopped out, $0. I did not lose anything, but I had a chance to be exposed to $3,500 potentially. That's why today's setup was so good. Now let me actually get into what my entry would have been had I actually taken this trade. All right, so 9:30 market opens over here. And as soon as market opens, we immediately put in a bullish SMT. And now if we just displace above from this SMT like it did, and create a break of structure, which it also did over here, I can enter, right? But I ideally would like to enter on a pullback to a fair value gap, which did not happen. If I just market enter like somewhere over here, my risk to reward ratio is my risk is gonna be way too big and my reward is gonna be smaller, right? So if I was like supposed to make, let's say like 3-4 RR on this trade, right? Let's say if we entered on this fair value gap, we would have had like 4.8 RR. But if I market enter over here and not wait for a pullback, then it would bring it down to like 3, for example. So that's why I wait for a retrace down to a fair value gap, which did not happen in this case. And we took that 15-minute equilibrium on this move up with no retracement, no chance for me to enter a trade. So now this equilibrium's out of my head because it's already done, right? And like I said, there's a chance for price to start going down once this equilibrium is taken. But what actually happened instead was there's a brand new equilibrium over here. Boom, look at this new range. We just pulled back into that equilibrium perfectly, okay? Now this is as good of a quality trade if we have an SMT. But that was the problem. I could not see an SMT, so I did not enter this trade. Because when I'm looking for SMT, I'm looking for swings like this, right? So this is a lower low. These two are lower, right? But on ES, it's the same, like exact same picture. There is no difference in the swing lows. And only when it started going up did I realize the SMTs were not here, but here on this candle. This is not a swing, this is just a single candle. And this low was taken on NASDAQ, but it was not taken on ES. That's a bullish SMT that I just missed because it wasn't clean. Because I did not expect for an SMT to be over here. I expected to be over here or like over here. So that was the perfect entry of the day that I should have taken, but I do not blame myself for not taking this because this SMT normally does not happen very often. It's a very messy SMT, but SMTs are valid if the context is right. In this context, high time frame structure, lower time frame structure, everything is basically perfect. In that case, after market open, if you see an SMT that is in your favor, you should consider it as a good quality SMT, even though it doesn't look like a good quality SMT. Because at the end of the day, I need an SMT to figure out where to put my stop loss so I could actually calculate the risk for a trade. So this was the trade that I missed. SMT, equilibrium, 1 minute fair value gap, and a bullish reaction to top it off. And guess what? It even had a small fair value gap within it too. This is the most precise point of entry that I should have taken. But I did not realize this SMT was here. And all of this happened within the span of a minute, right? This SMT was created, like it got confirmed over here. From the point this SMT was confirmed, which is on this candle, to the point where this target was taken, that's a minute and 30 seconds. So by the time I realized there was an SMT there, the move is already gone. That is the reality of scalping. Everything happens so fast. So I definitely need to train my mind and my eyes to spot SMTs anywhere. Or I should check every single candle to make sure I'm not missing any SMTs if the setup is perfect. Because chances are 95% of the time there is an SMT. Whether it be a good SMT, obvious SMT, or a bad SMT, doesn't matter, there will be an SMT. Had I taken this trade, this would be a full size trade. My full size these days are $750. So I would risk $750, which will be, let's just call it 700, all right? Because I like to trade with round numbers. So this will be 30 micro contracts with $700 worth of risk. And that would be at the stop loss because this is a protected low, it's an SMT. So I enter here, put my stop loss over there, and I would target the 4-hour highs, which is over here. Boom. That would be a $3,600 trade if this trade wins. Anyways, this trade doesn't hit the 4-hour target, okay? It actually dumps way before that. So then you might be thinking, then you lost this trade, right? Technically, no, because if I follow my rules, I would put my stop loss above the SMTs, no, just below the SMTs. So my trade will be break even when this gets hit, right? So now my risk is gone. And then when this SMT gets created and we start displacing up, my stop loss comes here in profits. And then what actually happened around the top was there was another SMT down here. So what happens is my stop loss moves to this low. So now my trade will get stopped out at $2,600 just below this SMT. Now, of course, this is all hypothetical. I did not actually take this trade, but I like to follow my rules. And if I followed my rules, this is how much I would have made had I taken this trade. And 2 weeks ago, I actually missed out on an exactly similarly high quality trade. Also because I did not see the SMT in time. So in total, I lost I could have made $4,000, $5,000 in total across the last 2 trades. But even though I missed out on making all that money, I'm still happy. I'm still happy because had I taken those trades, I would have passed my funded account and I would have gotten a payout already, right? So even though I did not directly benefit from it, I know that my system is working and I know that my patience is working because even though the 2 trades that I should have taken, I ended up missing out. Those were the only 2 trades that I wanted to take. Every other day, I did not want to trade. So in the past, I would trade on average 15 to 25 trades a month, okay? So 20 trades a month, let's call it. But this past month, only 2 trades. And guess what? They were both supposed to be winners and they were supposed to be big winners. Why? Because I only waited for A+ setups. I no longer settled for A- or B+ setups. That's how I was losing money. That's how I was taking 20 trades a month. But I simply kept it super simple. I ignored the B setups. I ignored the A setups. I only traded the A+ setups with full size. No more trading half size on an okay setup. No more trading 75% size on a decent A setup. No, none of that. I stopped convincing myself that okay trades were worth taking because that's how I was losing money. Only now I realize it. And I decided to keep it all simple. It's either A+ setup with full size or there's no trading at all. And the end result was within the last month, I only saw 2 trades that I could have taken. And guess what? both were big winners. At the end of the day, as traders, we're here to make money. We're not here to actually trade. We're here to make money. That's why everybody works, is to make money. So as traders, the point is not to trade. The point is to be profitable. The point is to have your losers be smaller than your winners. Taking more trades doesn't mean you make more money. It's actually quite the opposite. You would most likely end up losing more money. Taking less trades, now that is what makes you money. Because taking less trades means you are being patient. And if you're being patient, you are only taking high quality setups. If you're taking 10 trades a day, those are not very high quality, high probability setups. And that's why I only ended up taking 2 trades this past month. Actually, it's more like 1 trade. Last time I traded was 28 days ago, so it's more like I only took 1 trade this past month. But guess what? It would have been a $2,600 trade. That would pass my funded account. Boom. I would be funded. Had I followed my old ways and decided to take okay trades, B+ trades, A- trades, I can bet you that I would not be sitting at green right now. I would not be up $2,600 had I taken more trades. Because this was the only high quality trade that I could have taken this past entire month. I mean, don't get me wrong. I would show up to the market at 9:30 every single day to see if there is an opportunity to take a trade. I did not skip a single day, folks. I was there in front of the chart at 9:30 every single day. And guess what? That means I resisted 27 days to trade and only traded on one of them. Well, could have traded on one of them. There were 27 days that I told myself, this is not an A+ setup. I believe my A+ setup will come to me one day, but it is not today. That's the level of patience and discipline it took for me to take the single trade. And guess what? It's profitable. Even though it's a single trade, it's profitable. I want to show you guys the rule that I follow every single day. This is basically everything I'm looking for in the charts. Confirmed break of structure, close to high time frame draw on liquidity, and high time frame SMT or fair value gap or equilibrium. And then you need all of this on the low time frame as well, okay? This is just for high time frame. You need all of this to align on low time frame as well. And then if all of that happens, it's a full size trade. If all of that aligns, it's a full size trade. And if a single thing doesn't align, if a single thing is not there, okay? If there's no low time frame SMT, or there's no break of structure, no equilibrium, no trade. Non-negotiable. Keep it simple. This is what has shifted my mindset into probably a profitable trader, which is keep it simple. I stopped worrying about taking half-size trades. I stopped worrying about, lesser quality trades. I said, if it doesn't check all of these boxes, then I don't give a shit. I move on, I go to bed, I wake up tomorrow, and I start all over again. And at first, that's gonna take a lot of patience. And you're gonna be itching to take a trade. You're gonna be itching to make that setup justifiable in your head. And those trades that you forcibly justify, forcibly make it logical in your head, those trades are the ones that keep you unprofitable. Because if you only wait for high quality trades, you're gonna be trading way less, which means you're gonna be skipping the trades where you lose money and only taking the trades where you do make money. So now you have cut out all of your losers. And that's what I did. And that's what I am doing. But if you are a beginner trader, if you've only been trading for a few months, this is gonna be harder to do, because to have this kind of conviction, to have this level of willpower to just step away if you don't see a single thing aligning, it's gonna be hard because you don't actually believe that yet, because you do not trust your own knowledge. You do not have enough experience. But for me, I've been following this strategy for over a year now, so That's why I have experience every single day at 9:30. I know what I want to see. I know what I don't want to see. That gives me confidence in stepping away when I don't see what I want to see. Because I know if I trade that, it's going to lose me money. So I simply step away. But one day, once you get experience over a year of trading your same exact model, same exact strategy, you'll start seeing like all of these things that you didn't see before, and you get a feel for the market. And that's what I've developed. I've got a feel for the market. So it's not hard for me to step away at all nowadays. For the past month, I feel like I haven't been doing anything because every single day I look at the charts and I say, okay, it's not 8 plus. Bye-bye, close the laptop. Simple as that. Every single day until today, for the past month, it was like this. I look at the charts, how is it looking? High time frame has no breakout structure, then no trade, right? Next day, I look at the charts, there's no equilibrium, there's no fair value gap, no trade, boom. So to tie everything back in, I lost an opportunity to make a lot of money today. And I didn't, but I am still happy because that doesn't define who I am. To me, what's in the past is in the past. I didn't look for an SMT that time, and so what? It's already in the past. You need to just learn from it and move on. But the bigger reason that I am still happy is because you see your own setup playing out exactly the way you wanted it to play out, exactly the way you were expecting. That builds a lot of confidence in you. That's worth way more than the 2,600 that I could have made today. Nowadays, when I see a setup that I missed and it plays out exactly the way I wanted to play out, I feel so happy. Even though I didn't participate in that trade. Because you've got this skill forever. For the rest of your life, you are able to take the setup again because you know it. You know how to take that trade. So the fact that you missed a trade today doesn't really matter in the long run because every single day you're gonna be applying the same filter into the market to spot that exact same trade again. And think about the thousands of days of life you have in front of you. You could take hundreds of the same trade in the future and you would not miss it. Imagine how much that's gonna make you. So why stress over, $2,600 that I missed out on making today when 10 years from now, I would be sitting at 26 million in trading profits, trading the exact same setup, which was all possible because I already have that knowledge inside of me. So to me, I feel very happy on trades that I didn't take because I already have it inside of me. And that's basically about it. That was a very long rant, but I just wanted to get this out of my chest. I know I did not upload for the past month, so I'm just kind of bringing it all into one video. I did not stop trading. I am still looking at the charts every single day, but I have a higher standard for a trade now. That is why I am not uploading as frequently as I used to. I used to upload like almost every single day. I did upload every single day. But nowadays, I'm only gonna be uploading when I see a trade that aligns all of this. Only when I see all of this, I will take a trade and I will post a video about it. So I hope you got something out of this video. If you're a new trader, keep going, don't give up. Keep trading, keep following your strategy, and a year from now, you would have such nuanced experience. You would know what to expect. And when you know what to expect and what you want to actually see in the market, what actually makes you money, it will be so easy for you to start stepping away and being patient with your setups because you know what you want to see, because what you want to see actually makes you money. What you don't want to see doesn't make you money. So you just need to stick this one out. You need to stay in the game, build that experience. And one day it's going to be as easy for you to step away from the charts like it is for me right now. Stick to your rules. Do not look at other traders' P&L. Do not follow other traders on social media. Once you have your strategy down, isolate your mind, isolate yourself from other traders, because you need to follow your own trades. If you follow other traders, you'll feel FOMO, okay? And we all know how that ends. So stick to your strategy, keep doing you, fuck everything else. See y'all. Peace.